Welcome to Alpha Recap, your after-hours look at the biggest market moves. We're breaking down April 23rd's tape, regulation, AI re-rating, and a bunch of corporate filings that actually mattered. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Today felt like one of those days where regulation, earnings, and a little corporate housekeeping all collided, and the market closed reacting to each piece in very different ways.
Quick outline before we dig in. First, the Justice Department issued a major rescheduling order that moved some cannabis products to Schedule 3. Second, ServiceNow and IBM's commentary cooled the AI growth story, and tech names closed lower. And third, a cluster of Form 8K filings, including a delisting notice, reminded people how paperwork can create real liquidity events.
Exactly. It was one of those days where headlines were short, but the implications were pretty long.
On the cannabis front, and honestly, this was the biggest policy move of the day, the Acting Attorney General issued an order that immediately reclassified FDA-approved marijuana products and state-licensed medical marijuana into Schedule 3 under the Controlled Substances Act. Non-FDA and non-state-licensed marijuana stayed in Schedule 1. Analysts called it the most consequential federal cannabis policy change in decades.
Right, and the order also set an expedited administrative hearing for June 29, 2026. That hearing is now the near-term calendar anchor. It gives the market a concrete date to focus on while the legal and regulatory picture unfolds.
Wait, really?
So, what really stands out here is that the move is narrow by design. It helps FDA-approved therapies and state medical programs by easing the strictest federal prohibitions, which can reduce friction for research, certain banking interactions, and cross-jurisdictional commercial activity. But it doesn't instantly legalize recreational product or the broader unapproved market.
There's a lot of nuance. Some folks are optimistic. They see a binary catalyst that could unlock banking, tax relief, and institutional involvement if the rescheduling broadens. Others are cautious, saying day-to-day issues like Section 280E tax treatment and national bank de-risking won't magically vanish without more agency guidance or legislation.
I mean, when you step back and look at this, an administrative move like this changes the tail risk profile. It's not a flip-the-switch legalization, but it creates a clear pathway and a sequence. Administrative hearings, possibly interagency guidance from the IRS and FinCEN, and then the market can start to price in different outcomes.
Switching gears to tech, ServiceNow and IBM reported, and their commentary about AI monetization and timing caused a pretty quick reread of growth assumptions. Software and AI-adjacent names closed lower on April 23rd as investors parsed that nuance.
The crux of the debate is execution versus promise. Management language that stresses pilots, delayed monetization, or higher delivery costs can materially change forward multiple assumptions. Some market participants think this sell-off was a healthy reprice. Others think it was an overreaction to a couple of cautious managements.
Right. And the other thing is, it's not that AI is dead as a theme. The addressable market is still large, but the market is demanding more visible monetization and cleaner economics. So multiples compressed in places where the story wasn't matched by immediate revenue visibility.
Yeah, that tracks.
And beyond headlines, traders and analysts were reminded to read transcripts, not just bullet points. Single phrases about timing or margin pressure moved whole sectors, which tells you how much narrative was baked into valuations.
Now onto defense. Lockheed reported first quarter sales of about $18 billion, net earnings of about $1.5 billion, and earnings per share of $6.44. Analysts highlighted the program backlog and framework agreements, which supports the idea of predictable revenue streams in that part of the market.
Big move.
The larger point is that contract-driven businesses can provide relative stability when secular or narrative-driven sectors are choppy. But there are also caveats. Program timing, cost overruns, and political risk can still affect outcomes.
Let's talk four-made case for a moment. There was a heavy disclosure flow. Suburban Propane Partners, Molecular Biotech, Truist Financial, Mobileye, Nasdaq, Centerpoint Energy, and Amalgamated Financial filed routine items, earnings results, Regulation FD disclosures and exhibits, which are part of normal transparency. But Clean Energy Technologies filed an Item 3.01 delisting notice, and that is a different animal, because it can immediately affect shareholder liquidity.
Delisting notices are a reminder that corporate housekeeping can become market-moving, especially for smaller capitalization names. Liquidity can dry up fast, trading spreads widen, and both equity and debt holders need to reassess access to secondary markets. Honestly, I was a bit surprised by this one.
So where does this leave different investor types? Short-term traders have a clear event to watch: the June 29th administrative hearing on cannabis, plus ongoing earnings call language that can swing tech. Long-term thematic investors should note that the DOJ move is an incremental step for medical and FDA-approved pathways, but a broader regulatory shift depends on what follows, administratively or legislatively.
Income and conservative investors might find defense names with backlogs appealing for relative stability, while small-cap holders need to keep an eye on delisting risk. Credit and fixed income investors should watch regulatory clarity in cannabis, since it affects bank exposure and the credit profiles of regional lenders with marijuana industry loan books.
Strategically, there are a few practical watch items. Track the June 29th hearing closely. Read earnings call language, not just headlines. Differentiate procedural filings from material ones like delisting notices. And re-examine cross-market exposures, because regulation and narrative repricing cut across sectors. Think payment processors, banks, REITs with cannabis tenants, and defense suppliers.
So, what really stands out here is that April 23rd was a day where regulation, narrative, and corporate plumbing intersected. Analysts note that the DOJ action created a concrete event calendar and uneven outcomes until the administrative process plays out. And the ServiceNow and IBM episode reminded the market that secular themes rely on demonstrated monetization, not just promise.
Final takeaways. 1. The DOJ's targeted rescheduling was the day's biggest policy shock, and it set a near-term calendar that markets will watch closely. 2. AI remains a multi-year secular theme, but near-term sentiment and multiples can be volatile when execution and monetization aren't clearly visible. And 3. Don't underestimate Form 8Ks. Routine filings matter for transparency, but Item 3.01 delisting notices can trigger immediate liquidity shocks in smaller names.
A quick reminder, this is informational only. We're not recommending buying, selling, or holding any security. Analysts note the data and sentiment to inform perspective, but individual decisions should account for personal circumstances and, where appropriate, professional advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening.
Thanks, everyone. We'll be back after the next round of filings and earnings. If you want a deeper breakdown of the June 29th hearing or the ServiceNow and IBM calls, send your questions to stockalpha.ai and we'll tackle them next time.